Hey traders, a very warm welcome to you. So today, in this video, we're talking about getting overexcited. Excited? How can you get overexcited about trading? What? Question mark, exclamation mark. Let me explain. Now, if you are a day trader, let me put it in terms of a day trading perspective, and we'll put it in terms of swing trader perspective as well in a second. But day trading, because I can kind of resonate with this one. As with quite a lot of these things we talk about, some of these things we've overcome, been there, done it, experienced it, got the t-shirt, guys, as I'm sure many of you have who are watching this. It's kind of part of the course. So what do I mean by getting overexcited? How can you get overexcited? Well, this is the way that I think that people get overexcited. The market is set to gap down 100 points, whatever market you're trading, okay? Or overnight, something's happened in Germany, your euro is going to gap up. The next day, you are rubbing your hands together, and overnight, you're about to wake up, you're waking up and going to bed thinking it's going to be lovely and volatile. I'm going to make a load of money. It's going to be really good action. I'm going to really clean up. It's going to be a good day for me, you know? So you go into the morning, you're all excited, you're anxious to get going. And you feel that because the volatility is there, it means you're going to make some money. It means you're going to be, you know, oh, there's something happening today. It's a really good day. It's going to be a really exciting day. I'm going to get stuck in. I'm going to kill it. And that is just, again, you're swinging your emotional thermometer way too far, because you're kind of matching the fact that there's volatility with the fact that you're making money. And ultimately, it's not the case. You know, you sit down at your screen and you're trading, and you just see the first kind of movement, the first springboard out, the first 5-minute candle, whatever it may be, and you're in. You're not thinking about it. You're in because you just think volatility equals money. And of course, you may get that one right, you may get that one wrong, but you're over trading. You're getting involved too much purely because you're excited about the potential of the volatility that's coming up. Could be non-farm payrolls, could be interest rate announcements, but you're all geared up. You've kind of revved yourself up for the excitement that could possibly be coming, the volatility. And of course, as day traders, you love volatility, right? That's like what we thrive on. And so when we think there's going to be volatility, we can get overexcited, and it's no good, is it? Because you think about it, if you've got volatility and it's really swinging, you could just as well completely kill yourself as you could make a lot of money. You still got to understand and accept your risk and approach it with a lot more focus. Yes, you want to get more opportunities. If it's swinging up 100 points, down 100, swinging around really aggressively, you are going to get more opportunities in the day for your strategies to set up. If it does this during the day, you're not going to get your strategies right. You're not going to get any setups. If it's doing this and this and swinging down and then this and this, that's a completely different ball game. You've got trend pullbacks, you've got double bottoms, double tops, mean reversion, whatever. They all come into play. You can pull out all your strategies and you can get involved in them. However, it doesn't mean you can just punt away at it thinking that volatility is going to mean, you can't think, okay, I'm going to make lots of money today. Yes, you can be prepared for it, and you can say, hey, listen, today is going to be a big day. There's going to be, or expecting to be some movement. We have some catalysts like elections or Brexit, all these kind of things that come out. We know it's potentially going to give us some spice in the market. That's all very well, but we've got to quell this and say, listen, I've just got to stick to my strategies and manage my risk. Do I need to adjust my risk to suit the conditions? Are the conditions going to be too volatile for my risk? And if I'm risking X amount of money, do I need to kind of widen my stops because the average range is going to be 4 or 5 times what it is normally? So I need to kind of increase my stop to 4 or 5 times the distance, hence reduce my position size to accommodate it. That's obviously a challenge and something that a lot of people do. You go into it, you use your same position size, and you're in a completely different environment. You're overexcited, you think you're going to make money, you put your same position size in, and bang, all of a sudden you're stopped out and you've lost your daily loss. And you think, whoa, that is something that can happen. So that's how I kind of frame this overexcited, feeling that we get. And it's the same with any of these things. You should check out the previous videos. We talked about panic, we talked about greed, and we're going to talk about other things in the next couple of videos. It's all about never letting one emotion get too much of you. So too cocky, too greedy, too pleased. And you don't want to get too angry, too frustrated, too sad. Any of those things, any of them that are in too much are going to skew your decision making. You're not going to be able to make clear decisions based on the strategy that you've laid out, the risk management plan you've laid out, all those things that you've done in the cool, the early hours of the morning, whatever it may be. Have you done your plan? Market's not open, you've written it all down. Anything that allows you to drift away from that, i.e. an emotions trigger, you end up trading more from, if you've read the chimp paradox, talk about your chimp inside you as opposed to the actual cool, calculated person inside you, that will end in tears. So overexcited, watch out for that. If you're a day trader, it's, things happening. Swing trader, you might be coming into earnings season. You might think, oh, there's loads of good stuff coming out. Or you might have had a big move from, a catalyst from externally, and all of a sudden you've got loads of things that you appear to be bargains for you, And instead of looking at it carefully and calculatedly, you're overexcited thinking I can fill my swing trading portfolio up with loads of good stocks without thinking about it carefully. So just watch out for that one, guys. Not a one that happens, very often, but it's still an emotion you've got to be aware of and be a little bit cautious of when you're trading a little bit more actively than others. Give a thumbs up if you like this video, gentlemen and ladies, and don't forget to subscribe if you haven't already. Let me know your thoughts on that. Overexcited? Something affects you or not? Speak to you soon. Bye-bye.